Are we in for a housing crash or just a correction? I can tell you how I feel about this, or we can take a look at the numbers and find the answer. The sales figures just released by Treb, well, they're on the chilly side. Housing prices continue their downward trend. Now, we're down almost 18% compared to last winter. And the number of transactions, meaning the number of homes that are either bought and or sold, well, that's down half compared to last year. Okay, so here's what's happening right now. Month over month, the prices have seemed to stabilize so far. Now, where it goes from here, well, that's anybody's guess. But we do know some key variables that are at play. For example, inflation, well, it's still raging. And the global economic forecast, well, that doesn't look all that pretty. And the Bank of Canada will continue to raise interest rates into 2023. The last increase was in October of 50 basis points. What's really interesting is that we've actually reached a point where interest rates are higher right now than compared to any expert prediction you may have seen in the last 12 months. And with all that said, and after speaking with a few realtors and going through the data, people are still buying and selling homes right now. Yes, deals may be down in half, but people are still transacting. And every indicator that I'm seeing so far, the notion is that prices will continue to decline further. And the reason we're seeing these prices continue to fall is that homeowners who bought at or near the peak are facing immense pressure of these rising interest rates. And if they end up reaching that trigger point and they can no longer service that debt, meaning if they can't make their mortgage payments on time and their income can't support that mortgage payment altogether, they won't have an option but to sell. Now, these homeowners can try putting that house or that home on the rental market, but even if that rental income can cover that mortgage payment, they're out of luck. They only have one option left, and that's to sell at whatever price they can capture. As the pool of these sellers continue to grow and the pool of these buyers shrink, this naturally creates a downward pressure on pricing. The market today behaving by needs, not by FOMO that we saw during that crazy run-up in pricing. Fact is that buyers are still buying and sellers are still selling, the ones that need to at least. And what's really interesting is that in some pockets of the GTA, we're actually still seeing multiple offers. But the point is, this is no longer the norm. And the housing market, if you think about it, it can't really come to a complete standstill because family dynamics will always be changing. Families grow, families shrink. Kids need to go to different school as they go through different phases of life. They may have to switch to a different school zone. There's job changes. All that will dictate if someone needs to buy or sell a home. And it doesn't matter if something A is happening in the marketplace or something B is happening in the marketplace. Macro, micro, global economics, it doesn't matter. It's family dynamics that will still dictate certain housing needs. Yes, the broader market may slow down, but that's where you'll still see these transactions happening. It can't just completely, stop. Life still happens. And do me a quick favor and take a second in your life, hit that like, subscribe, and thanks button on the bottom of this video. It's engagement, and this engagement lets me know to produce more content like this. If you want to see more videos like this, all you gotta do is hit that like, subscribe, and thanks button. Simple as that. The other major issue I'm seeing in the marketplace right now is that bank appraisals are coming in lower at the time of possession versus before the shovels hit the ground. And the reason these bank appraisals happen at the time of possession is that the banks want to make sure that the value of your property is still in line compared to the mortgage that they're providing. Because the banks are giving you their money. They want to make sure that they can collect their money if something really bad happens, like you can't make your mortgage payment, they can take ownership of your home, sell it, and get their money back. It's risk management from the bank's perspective. And in some cases of pre-constructions, I'm seeing appraisals come in at least $150,000 lower at the time of possession versus before construction even started. $150,000 lower. That's insane. That's a lot of money to come up with in a short period of time. Especially if you take a look in the last 2 years, someone could have signed a variable rate mortgage at the purchase agreement at 1.5%. Today, a fixed rate is closer to 6%. The reality is for people in this situation, most of them, they can't come up with $100,000 or $200,000 at the drop of a hat. They're going to declare bankruptcy, and some even are. In March of 2022, which was the peak price for condos, prices have dropped both in the 905 region and Toronto by an average of $91,000. In addition to getting slapped in the face with these bank appraisals falling short, thousands of pre-construction buyers who would have signed up for a mortgage during the pandemic era these mortgages have ballooned since then. Think about it, you could have gotten a mortgage and expecting to make payments of X 2 years ago. That payment, because your mortgage rate has tripled, it's now at Y. And if you don't have the money to make those mortgage payments, you're out of luck. So we have this bit of a sticky situation in the housing market where some buyers are feeling that immense pressure, and that's why they're selling, and that's why we're seeing prices come down. The other piece is that rising rates and inflation, they're also hitting developers as well. So the cost of building has also gone up. For the first time in a very long while, there are cracks forming in our housing market. I'm not talking small cracks either. These are big cracks. What do you call major cracks? Let me know in the comment section down below. But there is a major issue in the foundation of our housing market. It used to be booming and now it's on very shaky footing. In fact, today, Canada is getting compared to what the US saw back in 2008. Remember how I said rising inflation and rising costs are also hitting developers? Well, at the start of 2022, 35,000 new condo units were expected to hit the GTA market. Of that group, 10,000 are now delayed. And if you don't know about the GTA real estate market, the primary form of housing are condos, and the primary purchasers of said condos are investors. As I said in my last video, the countries that are at the greatest risk of a housing bubble bursting are the ones that have the larger share of investors that make up a housing market. And no surprise, Canada's on top of that list. For a new condo building to be built, about 70 to 80% of the units must be sold beforehand to finance the project. And on average, it takes 3 to 5 years for a mid to high density building to be built from start to finish. So what this means is that developers heavily rely on the sale of these units to the construction of the building to the finish line. And if pre-sale condo buyers want to get out of the purchase agreement because either their bank appraisal came in way too low or just because they can't manage that heavy mortgage now, they can risk losing the deposit. And that deposit can be anywhere between 10 to 15% of the unit cost, and then they can try to walk away from the deal. With the developer, they can sue for significant damages, which may force the buyer to declare bankruptcy. Getting into a pre-construction condo without being prepared? This is no joke, so make sure you do your due diligence and understand all the proceedings. The pool of these distressed buyers is nothing compared to the real ticking time bomb, which are people who bought multiple properties during the pandemic. When times were good, investors piled on as much debt as possible to scoop up as many properties as possible, betting that the cost of borrowing would remain next to nothing and the prices on homes would just keep on rising indefinitely. And the fact is that 30% of property in Ontario is owned by multi-property owners, aka investors, aka landlords. This new reality, well, it's only really applicable for Ontario and BC. I've said this a few times over, is that Canada has many regional housing markets. And for some buyers, house appreciation in BC and Ontario, it was like winning the lottery. But for people in Alberta, in Winnipeg and Saskatchewan, Atlantic Canada, and so on, the math isn't always favorable, and actually housing prices can stagnate for a few years, for many years. And here's a quick case study to show you what I mean. Someone bought a house in Lethbridge, Alberta back in 2011 for about $424,000. They ended up selling it today in 2022 for $524,000. Now that may seem like, oh, they just made up with $100,000. But if you look at the math, the compound annual rate of return was less than 2% on this deal. Fact is that they would have made more money renting and taking the difference, investing it into a simple ETF, and they would have come out way ahead. Housing always doesn't win when it comes to investing. The national average resale price of a home is down 22% compared to February of 2022. And there is major risk that our economy is going to lapse into a recession. And what that means is that housing prices will either fall further or stagnate depending on where you are in the country. And this is the part where a lot of people forget. Yes, housing is expected to go up in the long run, but that rate of return is supposed to be equal or maybe just higher than the rate of inflation, when the rate of inflation is around 2 or 3%. We may get periods of double-digit gains like we saw in the last few years, but that's not normal. And when that happens, overly hot markets can turn bitterly cold, and this is where we are today. It's the law of averages. When something goes up crazy high, then it comes down just as fast to average out. That's the math. To put this into some perspective, here's some jaw-dropping numbers. Canadians amassed nearly $4 trillion worth of net wealth during the pandemic. Yes, $4 trillion. And guess where all that money came from? Well, it came from the housing boom, of which $900 billion has already disappeared as we go through this housing slump. And I'm just talking about the money we lost in Q2 of 2022. This declining wealth is pushing Canada faster into recession territory than originally anticipated. And the latest forecast of when Canada could hit a recession is the first quarter of 2023. That isn't all that far away. I'm often asked how would I summarize and characterize the housing market, especially when it comes to Ontario and BC. In very simple terms, the housing charged boom in net wealth of Canadians, it is over. In fact, RBC is projecting we're on track to lose $1.1 trillion in net wealth by the end of 2022. We've already lost $900 billion. That means we're about to lose another $200 billion more in the next 2 months. That's a loss of $100 billion in net wealth a month for the next 2 months. And they're further expecting net wealth to drop by $1.6 trillion in the next few quarters. Those are jaw-dropping stats, but that's the law of averages for you. And when it comes to these stats and our capitalism market in general, the people who are impacted and hurt the most, well, guess what? They're the ones that are lower income earners, the lower middle class earners. Because when people stop spending, that means businesses stop earning. That leads to layoffs. And every day in the news, we're hearing of more and more layoffs, especially in big tech. If you're watching and wondering what you should do, go over your spending. Figure out if and when things get tough, what can you eliminate from your budget without majorly impacting the quality of your life. Thank you so much for watching. Hopefully you had some meaningful takeaways from this video. Make sure to hit that like, subscribe, and thanks button. And I have some amazing discounts and sign-up bonuses available in the description of this video. These are some products and services that I use on a daily basis, and I really want you to try them out. Got nothing to lose. That's it for now. I'll talk to you in the comments section.